Conflicting perspectives on Ukraine's financial aid, a tale of divided opinions. As G7 finance ministers gather in Stresa, Italy, a contentious debate is set to unfold over the legality and feasibility of providing Ukraine with an additional €30 billion loan, drawn from the €270 billion in frozen Russian state assets. This proposal has sparked heated discussions and exposed deep divisions within the group, with the United States leading the charge for its implementation and Germany expressing reservations. The US-led plan, a bold proposal. The United States, strongly supported by the United Kingdom, has been actively seeking support for a plan that would utilize the frozen Russian state assets as collateral for a loan to Ukraine. The loan, intended to assist with reconstruction efforts or provide funding for much-needed weaponry, is seen as a critical step in bolstering Ukraine's resilience amid the ongoing conflict. Legal and economic objections, a bastion of resistance. Christine Lagarde, the European Central Bank president, has voiced significant legal and economic concerns regarding the complete seizure of Russian state assets. She emphasizes that such a move would undermine the international legal order and threaten the stability of the financial system. Additionally, she argues that it could lead countries with large surpluses, such as China and Gulf states, to divest from Western reserve currencies, fearing potential seizures of their own funds. A compromise, mobilizing assets for Ukraine's support. In light of these objections, the US and UK have proposed a compromise solution, mobilizing the frozen assets to provide an extensive loan to Ukraine, with the interest payments derived from the annual profits generated by the assets. This approach aims to circumvent the legal and economic concerns raised by Lagarde, while still providing Ukraine with much-needed financial assistance. G7 disagreements, a test of political will. The G7 states face a difficult decision, balancing the urgent needs of Ukraine with the potential long-term implications of seizing Russian state assets. The United States remains determined to push for the loan proposal, while Germany and other members express caution, highlighting the need for careful consideration and adherence to international law. Critics' concerns, a matter of semantics. Critics argue that using frozen assets as collateral essentially amounts to confiscation, blurring the line between freezing and seizing. They contend that this move would raise questions about the sanctity of international financial transactions and undermine trust in the global monetary system. A Belgium precedent, a cautious step forward. Belgium, which holds the largest share of frozen Russian assets within the G7, has agreed to allocate over €1 billion in taxes from the investment income generated by these assets to a joint G7 fund for Ukraine. This move represents a small but significant step towards providing financial support to Ukraine, albeit without resorting to direct asset seizure. Advocates' insistence, a legal scholarly perspective. Proponents of asset seizure maintain that legal scholarship over the past year has established a stronger case for its legality, arguing that state immunity can be waived under the doctrine of state countermeasures. They also contend that the risk of damaging confidence in the euro has already been mitigated by the initial freezing of the assets in 2022. Ukraine's urgent plea, a dire warning. Alina Halushka, head of the International Center for Ukrainian Victory, has issued a stark warning. Withholding assets from Ukraine may have dire consequences for Europe's security and economy in the event of Ukraine's defeat in the war. She emphasizes the need to prioritize Ukraine's survival and resilience over potential reputational risks associated with asset seizure. Conclusion, a crossroads of decision. The G7 finance ministers face a pivotal moment in determining the fate of Ukraine's financial aid request. The decision they make will reflect a delicate balancing act between competing legal, economic, and political considerations. As the debate unfolds, the future of Ukraine and the stability of the global financial system hang in the balance.